Every April, millions of Canadians feel a familiar, paralyzing dread. The deadline approaches, paperwork piles up, and anxiety of making mistakes sets in. We tend to freeze up. To make the problem go away, we either passively write a check without questioning the math, or we hand hundreds of dollars over to a professional to fill in the boxes for us. That avoidance has a real cost. Year after year, citizens leave thousands of their own dollars on the table simply because they look away. The tax code operates as a predictable rulebook. The government designed specific legal incentives to reward behaviors like saving for retirement, investing, or going to school. Once you understand how to read the rules, you stop being a passive taxpayer and become an empowered strategist. A persistent myth in personal finance suggests that getting a raise is dangerous. People fear that earning more money shrinks their take-home pay. Canada's progressive tax system divides income into distinct portions. Of a $60,000 salary, the first $55,000 fills the 15% container. Only the spilled over $5,000 hits your 20.5% marginal rate. Your effective rate sits much lower. The math favors you more because of the basic personal amount. The federal government shields your first $16,000 from tax. Removing that tax-free baseline drops your true average rate even further. Because you never pay your absolute top rate on every dollar you make, earning more money always results in more take-home pay. The rules of the tax game branch into two different paths based on how you are classified as a worker. The standard route is the T4 employee. Your employer automatically deducts income tax from your paycheck and covers half of your Canada Pension Plan contributions. This compares a standard employee pay stub to the T4A self-employed path. Freelancers get their gross pay up front, shifting the tax collection burden entirely onto them. Self-employed workers pay both the employee and employer CPP portions, nearly 12%. But you can deduct business expenses like a home office, supplies, and internet. Keeping more of your money requires strict adherence to the specific filing rules of your chosen class. To reduce your final bill, you can use strategic tools built directly into the system. RRSP contributions act as a tax deduction, physically shrinking the total income the government can tax, saving you hundreds. Conversely, non-refundable tax credits, like tuition, don't shrink income. They apply a direct discount against the final tax bill you owe. The sequence matters. Deductions shrink as taxable income at the start, and credits discount the final tax bill at the end. You also have the tax-free savings account. Investment growth inside a TFSA and the money you eventually withdraw are completely exempt from the tax system. The government created these incentives specifically to help citizens build wealth. Strategy only matters if you execute. You must hit the general April 30th filing deadline. Missing that deadline triggers severe mathematical penalties, an immediate 5% penalty on your owed balance, plus an extra 1% for every month ignored. Devastating mistakes are usually unforced errors. People forget self-employment CPP calculations, fail to report worldwide investment income, or refuse to file without cash. Even if you owe nothing, filing your return is the required gateway to receive government payouts, like the GST HST credit and the Canada Child Benefit. You don't need to purchase expensive software to do it. There are multiple free, NetFile certified options that handle standard returns. Using the tax code as a strategic guide stops the cycle of overpayment and ensures you receive every credit you have earned. Strategy only matters if you execute. You must hit the general April 30th filing deadline. Missing that deadline triggers severe penalties, an immediate 5% penalty on your balance owed, plus 1% for every extra month. The most devastating mistakes are unforced errors. People forget to calculate their self-employment CPP, they fail to report worldwide investment income, or they refuse to file because they don't have the cash to pay their bill. Even if you owe absolutely nothing, filing your return is the required gateway to receive thousands of dollars in government payouts, like the GST HST credit and the Canada Child Benefit. You don't need to purchase expensive software to do it. There are multiple free NetFile certified options that handle standard returns. Using the tax code as a strategic guide stops the cycle of overpayment and ensures you receive every credit you have earned.